Hey there, YouTube family. Stocks with Josh here. Today is going to be an interesting day in these markets. I've got a lot to cover. Before I begin, please hit that like and say hi in the comments section. This morning, the most important bit of news that we got was the PPI report came out. That is the Producer Price Index report, and we saw a 0.4% rise in the cost of goods for producers in the month of September. So let's just take a step back and acknowledge that's a very important report. And what it said is that the cost of goods have not pulled back, they've not come down, but they're rising still. We go back and we think of the jobs report that we got, that the jobs report was strong. There's hiring. We also see the PPI. It's strong. Prices of goods are going up. Both of these are leading us into tomorrow when we're going to get the Consumer Price Index report. And everybody will tell you that it has to come in weak. It has to come in soft. Otherwise, it appears that these markets are likely to respond badly, as we've talked about it repeatedly. $10 billion worth of puts by the smart money to see a massive drop because inflation is still out of control, still going to cause the hawkish hawks to raise interest rates, which is going to kill the momentum for American companies. In addition to that, it was estimated that it would only be a 2% gain, but we were up 4%. We were up double the estimate. That's got to send some alarms to the people that are looking at these markets and anticipating a slowdown of growth, but instead are seeing double the expectation of what they had in mind. This being a 5.6% increase from a year ago. So if we compare this year to last year, we are barreling forward with inflation for producers. The Producer Price Index, cost of goods, just going higher and higher. The only positive bit of news that we saw in the PPI was a deceleration in the rate of increase. So there was a rate of increase, but it went from 8.7 increase in the month of August to only an 8.5% increase in the month of September. So even though we're still going up, there could be a bullish narrative to be made that the rate of our climb is actually slowing. Inflation is still rising, but the rate at which it's rising is slowing. That could be why the markets have not absolutely flashed down today. We're sort of in a day of indecision. I mentioned to you guys yesterday that the Feds were out and about getting the word out on tightening. One of them is the Cleveland Fed President, Loretta Mester. She spoke yesterday, and her message was very simple. There's been no progress on inflation. That is powerful for her to come out and say that. She's basically saying this Fed that's in charge has made no progress. Them's are fighting words, Loretta. I think she's calling out the Fed and saying that, you know what, you've not got accomplished anything. It's out of control and it needs to be dealt with. And I think it's very safe to say that we are very likely to get another 75 basis rate hike. And I just want to say, I don't even know if that's ever happened before. 4 75 basis rate hikes, one after the other. You have to know that the brakes on this economy are being pulled in desperation hard with all force. This will dramatically slow down this economy. So let's talk a little bit about what's going on in the markets. As I'm making this video, the markets are absolutely mixed. There's green, there's red, there's gray. The dollar index, the US dollar chart, the DXY, is showing a little red doji. A red doji like this means indecision and low conviction. A small doji is like a plus sign or a little cross, and it means that there is low volume today and that neither the bears or the bulls are taking strong action. They're not quite sure what to do. They're processing the PPI, and really everybody is taking a step back because they just don't know what to do the day before the CPI report comes out. And over on the S&P 500, measured by the SPX, we have a little green doji. The same thing. We still have that bullish divergence. So a little green doji means indecision, and we're looking at bullish divergence. But I do want to warn you guys, even though it is leaning towards a potential bullish move, that bullish divergence could be absolutely wiped out if this market gains a sense of conviction by that CPI report and chooses a direction and goes that direction strong. I also want to point out that the US 10-year government bonds, which has an inverse relationship to stocks, is actually showing quite a bit of weakness. It looks to me like it's rolling over and we're getting bearish divergence there. So that's good news for the markets, because if that 10-year government bond rolls over and if it falls and breaks a trend, that will be bullish for the markets. So we've got a lot of mixed signals. We've got a lot of mixed indicators. Trust me, I'm not the only one. People are out there looking at all these signals and trying to figure out which one do they believe the most. there's a case right now for going long because of the high level of volatility and where we're sitting in the market. We see the TQQQ very low. We see the SQQQ very high. And it's reasonable in these environments to switch from going one direction to another. We've been going strong bearish for quite a while. There's a lot of reason to take profits there and begin to go long, but nobody's willing to do it until they find out what that CPI report is going to tell us. On that note, I've talked with you guys a number of times about the AAII sentiment report. That records the number of weeks in a row that are bearish that have been above 60%. We're at a record level right now with 45 straight weeks. Well, I'm not going to talk to you guys about that today, but I'm going to talk to you about the Stocks with Josh sentiment report. I think it's more bearish right now than the AAII. I woke up this morning. The week has not really gone the way I expected. I really thought we might get a couple days of positive movement in the market before the CPI, even if the CPI was going to come out bad and cause us a strong pull down. I thought we might get a couple days green before it. But the truth is, from last Wednesday, we've had Thursday, Friday, Monday, Tuesday, and now today is going nowhere. We are not moving up. I'm pretty bearish on my long trades. But what that tells me is always been the same thing. Whenever my fear level begins to get high, and I'm normally a little bit slower to react emotionally to these markets because I've seen these moments before. I've seen much worse moments in the market. I've had much more grueling trades that I've had to process myself through. But whenever it really gets genuine and I wake up feeling a little confused, feeling a little bit uncertain about some of my trades, that's when I know that it's time to get focused on what I'm doing because there's a huge opportunity at hand. It's time for me to consider putting more money to work. I've got almost most of my money in cash. I have a couple trade accounts that I'm doing limited size trades with, and I'm thinking of pulling some money over in preparation for a bigger move. So I went from being super bearish to getting a little bit excited about what it means for things to be as bearish as they are right now. So the markets have not been slowing down. And I just wanted to say, hey, I was in California for 3 weeks. And one of the things that stood out to me was at the gas pumps. Gas was around $7 a gallon no matter where I was. I basically hit the whole state. I started in San Diego, went to LA, and ended up in San Francisco and then flew home. And I can tell you from the bottom of the state to the top of the state, gas was just too expensive. And I've looked into the gas increases as well over the last month. And that's one of the big indicators I've told you guys before, that oil and gas have a huge impact on inflation in the market. Now, they have been softening and been coming down. But the fact is that the price of gas actually rose in the last month. And that's something that we absolutely have to keep an eye on because that would change the whole narrative of slowing inflation if the price of gas began to go on another run. So what are we looking at in the CPI number? The expectation is that it has to be lower than 8.1. We're going to get that number tomorrow at 8:30 a.m. Eastern time, and I really believe that's when the fireworks are going to begin. If it comes in lower than 8.1, we're going to see a lot of money flood back to work. We're going to feel happy. All of our stocks are going to be up. But if it comes out higher than 8.1, then it's going to be Armageddon, and you're going to wish that you were in a better stock or that you had taken some time to hedge your investments with an option like SQQQ. In regards to expectations, the Federal Reserve Bank of Cleveland is expecting an 8.2, which is higher than it should be. So they're coming out and telling us in advance. She's the same gal who's over that, who said that nothing had been accomplished to combat inflation, and she's coming out and saying, I'm going to let everybody know in advance it's going to be 8.2. We're not going down. So we've got to keep this into consideration. There's a lot coming into play tomorrow. Hey, my conclusion is coming up in just a moment. I want you guys, if you're liking this video, join the community on this page as well as our daily conversation about stocks and cryptos. To do that, hit the subscribe and the notification bell, and also join my community on MooMoo through the link that's provided in the description. If you open and create a MooMoo account, you can get up to 15 free stocks. And if you just put in $100, you're guaranteed 6 stocks and 6 chances at $2,000 each. Find me on that app under the Discover tab by searching Stocks with Josh and get involved in the conversations over there as well. We're able to do conversations there with no spam, unlike YouTube, which you always get the spammers who are trying to impersonate me with my picture and my name, and they say, reach out to them on WhatsApp, Telegram, and Instagram. Always be aware, be safe, family. That's not me. Okay, number one question yesterday. What about Verb? So let's touch on Verb. We are retesting the absolute lows of Verb right now. The number one question, though, on Verb is about a stop loss. And I want to talk to you guys. There's more than one way to hedge a trade. The stop loss is the absolute safest. Now, I'm not using a stop loss. I chose not to because I saw how Verb reacted previously when we got into a volatile environment on the stock market. There was a big flash down that it quickly recovered from. So I really don't want to get stopped out and lock in that loss because I do believe in the long-term story personally on Verb. And so the way in which I've hedged myself, because I'm not using a stop loss, is I've hedged myself in two ways. And I've taught you both of these ways on this trade, on this channel, and it's universal to all of your trades. One, I've limited my size. I'm not all in on Verb. I don't have a ridiculous investment on Verb that's causing me not to sleep at night when it goes down. Second, I've allowed myself money that I'm going to increase in size as Verb goes down. So when Verbs goes down, I have the attitude of, oh, this is exciting. I'm going to buy more of it at a lower price, bringing my overall average down so that when this environment reverses and Verb goes back up to test its highs, which I believe that it will, I'm going to have a great price. So the problem is that some of you guys have gone in with lump sums. You've told me in the comment section. I've had a number of people say, hi, I bought 5,000 Verb today, just today. And that's the exact opposite of what I've encouraged you guys to do. I've told you, buy it. One, be careful because it's a risky stock and you need to consider limiting the amount of money you invest in it. That's been my first advice. The second advice is buy incrementally. If you can buy 5,000 shares, buy 250 shares a day over the course of time. And if you've got a really big green day, pause. Wait for a red day. Wait until you get a confirmation of the direction. It was reasonable for us to accumulate around 50 cents because that might have held and we might have seen a much bigger pop up on some good news. But if you're all in, then you get a little bit more stressed out when it's hitting its lows because you didn't save any more money to buy at this level. But if you lump sum bought and you want to protect yourself and you want a stop loss, I can tell you what it should be. It probably should be 0.34 cents. Our last big support was 0.35 cents. So if the stock is truly in a bullish direction, that 0.35 cents shouldn't break. On a maximum down moment, we should come down and at least hit it or hit a penny above it and bounce from there. So if you wanted to look for maximum protection from a massive move down, maybe it would hit 20 cents and you don't want to deal with that because you bought in at 50 cents and it's too much to potentially lose, then the safest place for you to possibly be would be 0.34 cents. But you would be locking in a big loss. I don't intend to do that. So that's how I'm trading it. But you guys trade it the way that you feel that is best going to work for your investments. I also want to point out another technical on Verb about how I know that there is still room to the downside because we don't have the right candle. We need a candle like we had talked about when this Verb was going up. When it was going up, we needed a tall wick candle to tell us that the momentum was dying off. And now going down, we need a long tail candle to show us that it's going to hit a spot of support and bounce back. We don't have that. So we are still getting little red candles moving ourselves down. So we know we're not at the bottom yet. I'm imagining or I'm hoping that the bottom is that 0.35 cents and that we see a strong reversal. That's what we're going to keep our eyes on regarding Verb. So what's working in these markets and what is not working? Well, put options right now, shorts and inverse ETFs like the SQQQ, they're working. You guys know I called the SQQ a buy on Friday, August 19th, and we're actually up 82% from the time that I called it till today. We're getting ready, in my opinion, to get near the highs. The high is 67.69. And so if you have been in the SQQ all the way from when I called it till today, it's time for you to consider taking profits. We are definitely in the final move up on the SQQQ. It could be a violent move. We could get there in a single day and then begin to pull back. And yes, I will be then looking at a potential position in the TQQQ. I'm not calling that a buy today. So many of you guys will ask me in the comment section, so do I buy today? No, I'm watching it. We're still on the SQQQ and we're going to see where we get to, knowing that it could hit a high of 67.69 over the next couple days or the week. But I'm telling you in advance that I am now getting really close to making a call on the TQQQ, and I will keep you guys informed on that, and I will make a video. This last move gave everybody a potential of an 82% rise in profits, and so it'd be great to do that again. Final thoughts on this market today. Brace yourselves. You need to make sure that you guys are sitting in the right seats. The right seats are the right stock positions. Tomorrow is likely to be a bumpy road, but be mindful that even if the stocks rally today, don't let it fool you. These markets are mega bearish right now. We're not getting scared, and we don't intend to jump off the train of investing. Right now, I am down on anything that I have gone long on, and I'm up on anything that I've shorted. But anyone who is in these markets right now, in my opinion, isn't a hobby investor. They're the real deal, getting refined by the furnace of these markets. And you will come out stronger, and you will learn to master the money printing machine that is Wall Street in time. It all begins with a personal decision, and you have to stay committed to it. You guys, we are doing this together. We're doing it as a community. Make a decision about your financial future by joining like-minded people like us in this community by hitting the subscribe and the bell. You guys know that we will do it together. So let's see how the day plays out. Peace and blessings to you guys. See you soon.